Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, Google defends better search product as antitrust trial wraps up, as well as that Jerome Powell dilemma as the US economy is too strong to cut interest rates. We've got lots to talk about on the charts. Also, lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article to talk about is to do with Google. Now, Google is now making an effort to fight the US Department of Justice's effort to break up Google's monopoly grip over the online search industry. This comes as the most significant antitrust trial in the 25 years comes to a close. Now, I think if you've been watching this channel for a while, you might be able to remember back a few months ago when we did start to talk about this trial actually beginning. When we first spoke about, I think one of the first videos on this channel was actually to do with the Biden administration talking about basically going after Google, and then a more recent video maybe a few months ago spoke about the trial starting, and now of course we're covering the trial wrapping up. Now when we did first cover this trial coming to courts, we were of course mentioning the fact that this is ultimately the result of the Biden administration being very much anti-monopoly, anti-large corporation, and trying to make that a key kind of effort of theirs to kind of bring down and bring to justice. And this was something that we repeatedly heard from those key justice secretaries, those key justice ministers from the from the Biden administration, and from the side of the aisle, which includes the Democrats, of course. As you know, of course, we know ideologically, the Democrats are, arguably that kind of party which usually tries to align themselves with blue collar workers. That may be changing more recently, however that is kind of traditionally what we have seen, and ultimately Biden has kind of made it clear his effort to support unions, support workers, and fight against corporations' power. And this was kind of another example of the Biden administration trying to go down that route, trying to fight corporations in any way they can. And one of the key ways that often administrations do that, often the key way presidents do that, is through fighting the monopoly grips which certain corporations do have. Now, I'm currently on Google now looking at this article. I'm sure many of you are watching this you're watching this on YouTube, which of course is owned by Alphabet, so Google. So, we're all very aware here of the monopoly grip kind of Google does somewhat have over this kind of area of tech, especially the kind of search engine and advertising industry. And this is kind of what the DOJ is prosecuting, or trying to prosecute Google on, is this kind of topic of paying competitors off, and also buying up all these important tech deals and kind of licensing deals, so that Google is the only browser on certain phones, or is the default browser on most phones. And essentially, what the DOJ is then kind of accusing Google of is kind of fighting competition and ultimately implementing monopoly rules, and kind of pursuing monopoly power, essentially, which of course in the DOJ's eyes will negatively affect the customer as well as workers and that kind of thing. So that is really why we are seeing this. Now, as I mentioned already just at the start, this is the kind of first large monopoly trial that we've seen for really the last 25 years. Thinking back to the 1990s, we last had this kind of similar trial, I believe in 1999, with Microsoft, which of course covered a similar topic to do with their own products and that kind of thing. So this is something that we've definitely seen before, but not for quite some time. And quite interestingly, of course, Biden and his administration are pushing for this, especially. And this is, of course, also in the lead up to the 2024 presidential election, which we do know, of course, Trump is kind of in the lead for. So I think that's also something that's important to note always, is starting to try and understand what the motives might be behind these kind of moves, and whether this is kind of a move by Biden to rally his more left-wing supporters together, which might be very divided at this time to do with geopolitical issues, and trying to get them to focus on more economic issues to do with monopoly power and that kind of thing, with the 10-week trial against Google being pushed by the DOJ and is now coming to a close. The DOJ accused Google of suppressing search rivals through a system of paying off billions for anti-competitive agreements with new browser developers and device manufacturers. Pardon me. Google's lawyer, however, sought to push back against such claims and argued that users still had plenty of alternatives. The unsealed court documents revealed that Google had paid $20 billion to Apple in 2022 in order to become the default search engine for iPhone devices. The judge overseeing the trial pushed back against the DOJ argument that the quality of search had suffered due to a lack of competition, and the judge even went on to note that two key competitors had even entered the search market in recent years and within the last decade. The kind of accusations that had been made by the DOJ was that basically Google had monopolized its advertising and had abused its dominance by raising prices and manipulating auctions. This is the most high-profile monopoly trial since the DOJ pressed similar accusations against Microsoft back in the 1990s, of course. So a very important article nonetheless, and something that I think we may revisit should Google then make their own efforts against the DOJ with regards to this trial, of course. That's all to talk about in this article, though. Next article to talk about is something that we spoke about yesterday, which of course is Jerome Powell. Now, this is kind of a repeat of what we said yesterday, but I think it's still very important and very relevant to mention, just because it's still going to be affecting the markets so much today, as well as when we then enter markets next week. As of course today, we are receiving that very important US NFP figure, that unemployment figure, that kind of thing, which always has a massive effect on markets, as it really is that key indicator which economists, traders, and hedge funds really use to understand where Jerome Powell and the rest of the Fed will go with their monetary policy, as a key reason why interest rates have stayed high or will stay high going into the future is due to the fact that ultimately the US economy is still very strong, and that is certainly what we did hear from Powell on Wednesday. And so should we today see something very different from that, then that's when we can then start to see Jerome Powell's rhetoric devolve into something that's maybe far more dovish and that kind of thing. Now, Jerome Powell has now confirmed once again that interest rate cuts for the US economy are not imminent, and the economy remains too hot for looser monetary policy. This comes in a continued effort by the Fed to beat inflation back down to that 2% target. Now, of course, this is something that we did talk about before, as I've mentioned. And that 2% target is, of course, very important, with this news prompting worries for Joe Biden, as the high borrowing costs cause Americans to complain once more about the economy in the lead up to the November elections. Now, this is the kind of key thing to note from this article, especially, is that kind of comment to do with Joe Biden and the November election, as we do know, of course, that Trump really is leading at the moment, despite facing a great deal of criminal charges, as well as his own kind of issues to do with fundraising. We know that Biden, of course, is outraising Trump, but at the same time, polls are still showing that Trump is leading, that most people believe that Trump would handle the economy better, and all these things kind of as a result culminate in kind of Biden being in a really bad position, And, this is also now being added to by this situation with Jerome Powell not looking to cut rates soon, as of course, voters are complaining in the US around having these high interest rates, high borrowing rates, which of course is affecting their ability to spend and also, kind of invest in new ventures and that kind of thing. And so Biden does really want to start bringing down that interest rate as well as inflation rate, so that then, kind of some success can be, kind of used for, the election. And we're not really seeing that we're not really seeing that form just at the moment, especially, and we definitely won't see that until Jerome Powell does then cut rates. So that's the key issue facing Biden. This is why both the Fed and Joe Biden are in tough spots with the economy, since the US economy is technically very strong and is doing better than most economies, but ultimately this strength is also forcing the Fed to keep rates higher for longer, putting Joe Biden in a tough spot where an economic win is hard to parade over when voters are still being hurt by high interest rates. The FOMC on Wednesday had also admitted that little gains have been made on bringing down inflation or cooling the economy even, and thus ruling out a rate cut in June. Rate cuts would ultimately favour Biden, but now look unlikely, which plays into the current favourite of Trump, of course. So a very important nonetheless to note, and something that's definitely important to keep on your mind, not only as we have the NFP figure today, but also with regards to the November elections. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening to end off the week. And I think all these markets will be affected greatly by today's NFP figure. So that's, once again, the key thing to keep on your mind. Now, what did we really see yesterday price action wise? Well, we've really seen price now swing to the upside and push all the way up to these higher levels of liquidity, which price had previously reacted to and sold off from. Arguably, you could even say that very recently on Monday, price also sold off from this similar level, but now price has actually made its way into this key liquidity zone that we've of course noted many times before. And what we would usually expect from such price action is to see price sell off and move to the downside. Ultimately, though, as I'm speaking, we haven't seen that just yet, but certainly that is something that we could be looking forward to for the rest of today. Now, why this might be the case? Well, ultimately, funds often try and get in their kind of key hedging positions at the top and bottom of these ranges. So whatever the data may be, such as the NFP figure today, they're kind of hedged against any issues, and that is really what we could be seeing. That is really something that we could be seeing form here on the US 30, with likely positions being hedged to the upside around this key liquidity zone, and then on the other side, positions being hedged bearish wise at the top over here, which is where price currently is. So that is certainly something that we could be seeing form right now, and something that you should definitely keep your eyes on today, as we are receiving such key information. So definitely keep your eyes on that info, and also look out for these key liquidity levels, which price is likely to have already interacted with and will then also interact with. Next to talk about, though, is the dollar, which, just like on the US 30, will be greatly affected by the data that we are receiving today. And price has now dropped below this key liquidity level and key liquidity zone that we noted as this kind of bottom of the range, which price had been interacting with for quite some time, and now price has fully broken below that. So we could definitely be seeing price make its way all the way down to this next area of liquidity during today's price action movements, and that could either be before we'd receive that NFP figure, or even during the NFP figure when we experience that great deal of volatility. So I think that will certainly be an area of relevance today when price is moving around greatly. And if we kind of incorporate whatever NFP, whatever figure does come out into our overall fundamental outlook, then we can then start to kind of see where dollar could go. Next talk about though is Euro USD, which is currently pushing into that higher level of liquidity on Euro USD, of course, which has previously acted as an area of support, but now really is acting as a key area. As a key area of resistance, with price previously reacting to this and selling off, and now seemingly price is moving once again into this area. And with the NFP figure coming out today, we could definitely see price once again sell off from that level. Just as I said on the dollar though, this lower level does seem to be where price has where firms have hedged their bullish buys, and now we're seemingly going to see the same for the sell orders being placed. So definitely keep your eyes on Euro USD during today's news releases. Next talk about though is pound yen, which has just been absurdly volatile recently, with of course last week price pushing to the upside, but starting off this week prices spiked all the way up into and above the 200 pound per yen mark, and then also dipping as low now to the current levels of 192. So extremely volatile price action, which is causing price to range. And keep your eyes on yen news, as that is really what is affecting such volatility at the moment. Next talk about though is Bitcoin, which is still under that $60,000 a Bitcoin level, which is marked out kind of by this key liquidity zone. Still, we're not far off from that level, and arguably you could say that price has now hooked back and interacted with this level and could be ready to run to the downside. As in yesterday's market briefing, I really did note that this liquidity level was somewhere which I believe price was going to once again come back to, be attracted to, should price then continue a sell-off. And of course that NFP figure that we are receiving today will also affect Bitcoin, as Bitcoin has been greatly affected recently by the Fed's rhetoric. Next talk about though is gold, which not much can be said for gold at the moment. Gold is kind of consolidating, not much is happening. That said, price is still sitting just on this 50% Fibonacci retracement level, so definitely upside potential is there, but then again price has recently interacted with this key area of resistance and bearish liquidity zone, so maybe price is also getting ready to run to the downside. Lastly to talk about though is oil, which has broken below this key liquidity zone, but is currently kind of stagnated and is consolidating, and arguably that's just because that's where price is meant to be for the moment, but definitely keep your eyes on any oil news, as that will be affecting the price. And definitely should price swing to the upside, this area of liquidity may then act as a new area of resistance. So that's the key area to keep your eyes on. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar, where we are getting a great deal of very important data today, so lots to listen out for and lots to think about. Now firstly, we will be getting the French industrial production figure, followed by the Spanish and Italian unemployment rate figure. Followed by that, we're receiving the British services figure, followed by the Eurozone unemployment rate figure. And most importantly, of course, we are definitely receiving the NFP figure, as well as the US unemployment rate, and of course that will be affecting markets greatly, with that likely influencing the way traders perceive future Fed monetary policy. And that's why that area is so which is why that kind of liquidity, that piece of information is of course so important to listen out for and understand, as well as that of course we're receiving the other data which is usually released alongside that, including also some business and services data from the US as well. So that's something that you can also look out for sure. That's all to talk about on the economic calendar though. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great weekend as well. Have a great one. See you later. Bye.